Dividends are a great form of passive income. One of the best parts is the fact that whether a stock goes up or down in price that particular day, you'll still be receiving income through the form of dividends. Now, the key here is the fact that I said high quality, not the highest yielding dividend stocks. There's a lot of high yield dividend stocks that look like dividend traps out there. We want to focus more on quality. As such, in today's video, we're going to take a look at 7 dividend stocks that have me earning at least $500 or more per month on average throughout the entirety of the year. And that number is just going to continue to grow year in and year out. But before we begin, do me a huge favor. Click that like button down below. Subscribe to the channel so you'll be notified anytime we drop new content. And let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great products and resources available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video. First, understanding why companies pay a dividend and some red flags that we want to look out for when analyzing dividend-paying stocks. So first and foremost, we want to invest in companies with positive free cash flow. When you have positive free cash flow, this can be used to reinvest back into the business. This is the growth aspect. So if you're a growth company, an ultra growth company, then most of your free cash flow is probably going to be going back into expanding and adding further growth moving forward. What else can free cash flow be used for? It can be used to pay down additional debt, make strategic acquisitions, and also pay a dividend if the company chooses. So companies that have negative free cash flow obviously can't pay dividends, something that I hone in on when analyzing a dividend-paying company. So when we go through today's video, we're going to take a look at the dividend, but also the free cash flow that the company is generating to look at the free cash flow payout ratio to determine the safety and reliability of that dividend moving forward. Because there's nothing worse than investing in a dividend-paying company only to see that dividend cut in the near future. So let's begin with our first dividend stock that has me earning at least $500 per month. And this is overall. These 7 stocks together earn me over $500 a month in dividend income. Beginning with the first one, which is Johnson & Johnson. Stock ticker J&J. Johnson & Johnson is a healthcare conglomerate, one of the largest healthcare companies in the U.S. today. The company currently has a market cap of $381 billion, and over the past 12 months, the stock has fallen 4%. Johnson & Johnson this past year spun off its consumer health segment, which had popular brands such as Band-Aid, Tylenol, Motrin, just to name a few. That is now a separately publicly traded company known as Kenvue. Johnson & Johnson today still has its pharmaceutical segment as well as its medical device segment known as MedTech. In terms of the dividend, Johnson & Johnson pays $4.76 per share dividend, which yields 3% on the dot. So 100 shares of Johnson & Johnson would earn you $476 in annual dividend income. Johnson & Johnson is a dividend king, meaning they have increased their dividend for more than 50 consecutive years. When it comes to J&J, they've done this for more than 60 consecutive years. When looking at the company's free cash flow over the past 12 months, we see that the company generated free cash flow of $15.74 billion, and they have paid out dividends of $11.86 billion, giving the company a free cash flow payout ratio of 75%. That's on the higher end of the spectrum, but not an area of danger by any means. Dividend stock number 2 is ABBV, stock ticker ABBV. Moving from one healthcare company to another, and AbbVie is a pharmaceutical giant, which was spun off from Abbott Labs back in the day. The company is one of my favorite and one of my longest held positions since I started investing a number of years ago. AbbVie I like to consider as the investor's trifecta. They offer a high yield, dividend growth, as well as share price appreciation growth potential as well. For years, the company had the #1 selling drug in the world, which is Humira. But at the start of 2023, they saw their U.S. patent protection expire and more generic brands have rolled in, which have brought down the sales of Humira. So now a lot of the focus is on the next up-and-coming drugs, which are Skyrizi and Rinvoq. AbbVie currently has a market cap of $296 billion, and over the past 12 months, the stock has increased roughly 15%. When it comes to the dividend, ABBV pays an annual dividend of $6.20 per share, which equates to a dividend yield of nearly 4%. So 100 shares of ABBV would earn you $620 in annual dividend income. When looking at the company's free cash flow over the past 12 months, ABBV generated $24.73 billion in free cash flow and paid out dividends of $10.42 billion, giving the company a free cash flow payout ratio of just 42%, giving the dividend plenty of safety and room for continued growth. Speaking of growth, ABBV has a 5-year dividend growth rate of 9%. Dividend stock number 3 is VICI Properties, stock ticker VICI. Now we're moving on to a REIT. And for those of you that have watched this channel for some time now, you know that this is a popular REIT, one that I like a lot. It happens to be my largest individual REIT holding. VICI Properties has only been on the public market for about 5 years now, but they have hit the ground running, and they have many popular assets, being the largest landlord on the Las Vegas Strip. Some of those assets include Caesars Palace, MGM Grand, Mandalay Bay, the Mirage, and many more. VICI has a market cap of $32 billion, and over the past 12 months, the stock has fallen 10%. When it comes to the dividend, VICI pays the second largest dividend in terms of yield at 5.5%, which equates to $1.66 per share. So VICI is the second highest in terms of dividend yield on today's list, and it only trades at a price of $31. So it's a lot easier to accumulate 100 shares of VICI than it is, say, Johnson & Johnson. When it comes to my portfolio, I own roughly 300 shares of VICI. VICI is unique in the fact that they are a dividend growth REIT, which is not something you see very often, as they have a 5-year dividend growth rate of 10%. Over the past 12 months, VICI has generated cash from operations of $2.09 billion, while paying out total dividends of $1.54 billion, equating to a payout ratio of 74%, which is perfect for a REIT. Dividend stock number 4 is Realty Income, stock ticker O. We're going from one REIT in VICI to now another REIT in Realty Income, which contributes heavily to my annual dividend income year in and year out. Realty Income is actually the one name on today's list of 7 stocks that does in fact pay a monthly dividend. Each and every month, you get paid a dividend from Realty Income. Realty Income is a retail REIT, but they have started to invest more in the hospitality and casino sector, which just proves the upside when it comes to VICI Properties, which we just looked at. When it comes to market cap, Realty Income has a market cap of $40 billion, and over the past 12 months, the stock has fallen nearly 20%, making for a great entry point for those on the sideline. When it comes to the dividend, Realty Income pays a dividend of $3.08 per share, which again is paid out monthly, and the yield at 5.7%, slightly surpassing that of VICI Properties. 100 shares of Realty Income would earn you $308 in annual dividend income. Over the past 12 months, Realty Income has generated cash from operations of $2.83 billion, while paying out total dividends of $2.03 billion, equating to a payout ratio of 72%, making the dividend plenty safe. Remember, when it comes to REITs, they are required to pay out 90% of their taxable income in the form of dividends. One reason you usually see REITs with a higher dividend yield. Now we're going to move on to dividend stock number 5, which is Altria Group, stock ticker MO. Now, Altria Group is a popular name amongst dividend income investors. It's also an unpopular name for many investors based on the products that they sell, nicotine-related products. Although the company has slowing EPS growth, they do have that very high dividend yield that continues to grow. Currently, Altria has a market cap of $74 billion, and over the past 12 months, the stock has fallen more than 10%. When it comes to the dividend, as I mentioned, the yield is quite high at nearly 10%. The company pays an annual dividend per share of $3.92. So when it comes to 100 shares of Altria, you'll be earning $392. When looking at the company's free cash flow over the past 12 months, Altria generated $8.48 billion in free cash flow and paid out dividends of $6.73 billion, giving the company a free cash flow payout ratio of 79%. Again, on the higher end of the spectrum for a non-REIT, but the yield is high and the growth is slow, so it does make sense from here. Still a solid dividend that has grown for more than 50 years with a 5-year dividend growth rate of 5%. Dividend stock number 6 is the Vanguard S&P 500 Index Fund, stock ticker VFIAX. So these last two positions are actually not stocks at all. They're actually ETFs or index funds. So just wanted to preface that. And this happens to be the largest position within my total portfolio. Within my 6-week Investing Accelerator course, where I work with students one-on-one, building out a strategy, understanding how to read financials, and understanding, more important, how to value individual stocks. But one of the things we do when talking about strategy is the fact that you need to have, and the importance of having a core portfolio, a core position for your portfolio. This is that for me. My core portfolio, something to fall back on anytime we're in a good economic times or anytime we're in bad economic times. I can rely on my S&P 500 core position. If you're interested in working with me with our 6-week Investing Accelerator program, there's a link down in the description below. You can click on that and inquire for more information. When it comes to this index fund, it's obviously managed by none other than Vanguard, and it has assets of $980 billion. Over the past 12 months, the S&P 500 is up nearly 20%. As the fund holds some of the largest technology companies towards the top in terms of weighting, many of which pay little to no dividends. The yield is not that big, but since it is my largest position, I still earn a solid amount of dividends per year. Here's a look at the yield, which, as I mentioned, is low, around 1.3%. So it does take a larger position to make a dent when it comes to earning dividend income with this ETF. And this brings us to our final position here, which is the Schwab US Dividend Equity ETF, stock ticker SCHD. If you're a regular on this channel, then you know SCHD is one of my favorite dividend ETFs that's out there. It pays a higher yield than many high yield dividend ETFs, and it has faster growth than many dividend growth ETFs on the market today. And in terms of diversification, SCHD is well diversified. In terms of assets under management, SCHD has $52 billion. And over the past 12 months, the ETF is pretty much flat. In terms of top holdings, you will see the likes of Broadcom, Merck, AbbVie, Amgen, the Home Depot, Verizon, Cisco, Texas Instruments, Chevron, and Coca-Cola. These top 10 holdings account for 42% of the ETF, and in total, SCHD invests in 104 different positions. In terms of the dividend, as I mentioned, SCHD has a higher yield than many high-yield ETFs and faster dividend growth than dividend growth ETFs. The ETF currently yields a dividend of 3.5% with a 5-year dividend growth rate of 13% and a growing dividend for 12 consecutive years. When it comes to dividend investing, it is important to understand that it is a process. The power of compounding is very real. The thing you got to understand is you need to stay invested, keep investing, and remain patient. It takes a while for this process to play out, but the longer you're able to hold on and keep adding more and more fuel to the fire, this is going to grow faster and faster, and your dividend snowball will get rolling faster and faster from that standpoint there. So down in the comments section below, let me know which of these 7 stocks do you own in your portfolio, and how much in annual dividend income do you receive on a yearly basis. If you enjoyed the video, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.